joining us now is Omeed Malik, founder and president of 1789 Capital, also Donald Trump Jr.'s business partner with 1789. Let's talk about your investment firm and your investment thesis, which is essentially investing in America Inc. and businesses that align with what I guess you would describe as MAGA ideology. Is it because you sense an economic opportunity there, or is it an opportunity to invest in political ideology?
I think it's actually a different thing. It's, as I described a little bit yesterday, this is something we started observing back 4 years ago, actually when the Biden administration was in power. We felt that the private sector was actually becoming quite politicized before we had any involvement in it. It was just on the other side of the aisle, if you will. So ESG started becoming commonplace around 2010 and has grown into a multi-trillion-dollar asset class in of itself. However, our perspective is, one, we don't agree with it politically, to your point, and two, we think it destroys shareholder value. The other part of it that was very concerning to us was we felt that some way these big companies were in cahoots with the federal government in the United States, depriving us through a backdoor manner in the private sector constitutional rights. And that's when Don and I really wanted to get involved, and to your point, started financing alternative products.
Do you think this is the beginning of a new trend or the end of a trend in the U.S. where capital markets are politicized, so to speak?
I don't think it's going anywhere, actually. I think what this is a byproduct and a reflection of the fact that people and customers want to shop their values in some respects, and that politics has entered into the boardroom, and that's undeniable. The only perspective that we have is we'd like the other half of the country to have a seat at that table. And if some of those larger corporations don't want to give a seat to us, our thesis was that we would provide new options. And that has obviously been built into something much bigger now, where we want to help the president's agenda in the private sector. And that's why I said yesterday to you, we are MAGA investing, Make America Grow Again, mostly around innovation and technology, areas where the government can't be the solution.
Where is the bulk of your funding coming from?
Mostly family offices in the United States.
Okay, and have you found it difficult to get funding, given the views and the investment thesis of the funds? And given some people would say it's quite polarizing.
It's a great question, and we knew coming into that was going to be the case. So for our first fund, we did this because we thought this was right, not because we wanted to raise a lot of assets. We particularly targeted people that we knew had the viewpoints that we did, because we're going to support something like this. And as time has gone on, I think we've been vindicated politically, culturally, and now economically, so more people want to partner with us. But we were early by about 3 years to where the country was going to go. And I think long term, we're okay if some investors may not like what we're doing. There are a lot of investors that don't like ESG or DEI policies, as we're seeing. We're just providing another option for investors.
So I want to ask you about something else. The president tweeted overnight that he's considering taking Fannie Mae private. And I know you sit on the board of Fannie Mae. Can you comment on that? Why would it make sense to do this?
Well, ultimately, it's the president's decision. Fannie and Freddie are hugely important in the United States economy, as you know, and they entered in conservatorship back in the financial crisis. Fannie, which I'm on the board of, has over $4 trillion of assets. And I think the president is seeing that they're doing really well, and there may be an opportunity there to privatize or take it public or uplist it, because they're already publicly traded.
But also raise revenue as well.
Exactly, that's right. So ultimately, we'll see what the president wants to do. In the interim, though, as that decision is being made, I'll work with Director Pulte and, as you pointed out, Secretary Bessent and Lutnick to make sure that the company is the best possible financial shape.
What do you think the ramifications would be on the U.S. borrower, though? Because without implicit government support, that will lead to higher interest yields. We already see interest yields moving higher, and therefore it will become more unaffordable for Americans to borrow.
That's one of the critiques of the plan, and that's why we have to start looking at it with the secretaries and Bill Pulte, as I just mentioned, and we'll have an analysis and make the decision that's best for the American homeowner, for sure.
Are you concerned about how high U.S. yields are trading right now, 30-year, 5%?
I'm not, because as I pointed out yesterday in the conversation, this is just about 100 days and change into a new administration, and we are doing things that are long overdue. And part of that process was going to have a little bit of a reaction by the bond market and the equity markets. The equity markets have recovered, and long term, as the plan starts getting implemented, tax cuts and some of the more positive things that the market likes, I think the bonds will also react accordingly.
Yeah, so if potentially this tax bill does get passed, it's estimated to add something like $2.5 trillion, potentially even $5 trillion to the U.S. deficit over the next 10 years. You think that that is a valid return on investment then, to increase the size of the deficit so much in order to get this tax cut through?
Again, but the counter to your argument is that you're going to have much stronger growth when you do some of the things we talked about yesterday as well, whether it's deregulation or tax cuts or energy and all the investment that's coming in the United States, because the United States is open for business. So that's only one side of the ledger. We're going to see what the growth is on the other side. And of course, you have to give us more time to cut certain programs as well, which we have begun to do as well.
Yeah. Omeed, really good to talk to you. Thank you so much for joining us.
Thank you.
That was Omeed Malik, founder and president of 1789 Capital.